Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, February 9th, 2024, episode 718. Little under the weather today, been recovering from a little bit of cold, but market here is certainly not slowing down, therefore the show must go on. We've got some exuberance in the air, to say the least. We've got a lot of these mega cap massive companies that continue to really extend themselves into the stratosphere. We're going to look at a lot of them later in the show here and take a look at some of the technicals. We also are going to keep our eye on small caps here. We're going to make the case that they are at a turning point, that small caps might finally be ready to make a run at the top end of that range and start to break out to some new cycle highs. We also have Bitcoin breaking out of a consolidation that's been taking shape here over the last couple of months and really starting to build some momentum. China, on the other hand, here still trying to carve out a bottom. There's some good volume coming in, but still tough to really break out and change that longer term downtrend that those stocks have been in. And we also have the dollar looking finally a little bit tired here, and we're going to look at those charts in just a little bit. So stick around. Let's get into it. All right, we've got some charts in front of us. TC2000, that's the charting platform we're using in today's video. If you're new here to our Stock Market Weekly series, welcome. Thanks for joining us. We do a lot of support. We build custom stock scans, custom indicators, layouts, all kinds of support for TC2000. So if you are a user, or if you're considering being a user, we've got a referral in the description of this video. Check out our website, thetraderist.com, see what we have in store for you for the platform TC2000. Let's get into the numbers here. You can see another positive green week across the board here. Dow Jones was the laggard, so up just slightly this week. All of the gains really coming from the Russell 2000, Nasdaq 100, and, well, I guess the S&P 500. So 3 out of 4, not so bad. But you can see that we finally had a little bit of small cap outperformance here. Look at the 1 month returns, though. It has been dominated by technology, and we're going to talk about that in just a little bit. If we take a look here at our volatility indices here, both VIX and Nasdaq Vol both came down a little less than a point this week. So 12.92 into the weekend here for the VIX. If we take a look here at sectors on the week here, we did have technology, XLK being the dominating sector, best performer on the relative strength list here. Consumer discretionary and healthcare round out the top three. We had 4 sectors in the red. We had utility, staples, communication services, and energy were the only sectors not pulling their weight this week into the green. Now, let's take a look at those trends here. So if we break down the stock market sectors here with our smart trend filters, this is an indicator we've got built out for TC2000. We also have it built out for TradingView. You can see that we didn't really get too much changing this week. We had a sort of a turn up here in energy as it tries to lift up, kind of produce a new buy signal, enter an uptrend this week. Biotech continues to struggle here and just kind of go flat to downward, and same thing with utilities, and you can see staples maybe starting to roll over a little bit, but really no other big trend changes. I guess you could put discretionary in there, XLY starting to turn back up from a slide down. So I take that back. Consumer discretionary was one of the bigger sort of uptrends that were produced this week, along with energy. Now, if we take a look here at market breadth, we got a little bit of something to be happy about, to hang our hat on. You can see down here the number of 52-week highs made across the New York Stock Exchange starting to, really kind of cluster and build some momentum. That is something that is exciting, something we haven't seen tremendous strength from. If we take a look at the 52-week lows, you can see we're still getting pretty much a dormant sort of, dried up list here, which is good. And this here on the 52-week highs is really what we've been waiting to see expand. And so we're getting some good progress this week that shows that a little more strength is kind of broadening out there underneath the hood. Now, if we take a look here at Investors Business Daily, it's their top 10 from their IBD 50 list. So Investors Business Daily is a sponsor of the show, so shout out to them. Thanks for helping make the show possible. You can support us, support them with a link in the description. That'll get you access to their IBD digital subscription. Pretty nominal monthly subscription fee, but it gives you a access to their top 50 stocks curated every week, along with some other goodies. And you can see pretty monster moves here from a handful of these names. In particular, take a look at ARM Holdings. This had earnings, of course, and just had an absolute rocket ship to new all-time highs. So we'll take a look at that chart later, up 62%. But you can get access to this list with a link in the description of the show. Thanks to IBD for sponsoring this show. Now, if we take a look here at commodities, we take a look at top performers here. Bitcoin at the top of the list here, 10.3% to the upside. Nice and impressive move there. As we talked about top of the show, breaking out of its longer term range it's been in. Oil also not too shabby, up 6%, along with DBA working on its fourth or fifth consecutive nice week there. So good run here for DBA. Nice to see oil reclaiming as well. Dollar index was up again, but off of its highs from the week. If we make our way down the list, natural gas 11.42% to the downside, and in true natty gas fashion, has really just given up a spectacular start to the year and is back towards its cycle lows. Let's get into treasuries here. You can see for the most part, treasury yields were higher this week, so continuing to put some pressure here. They are kind of stagnating a little bit. I mean, they lost, between last week and this week here, they've lost a little bit of momentum, but they're still putting in a good kind of retracement rally here. So we're waiting to see if they can fizzle out or if this trend is going to continue up and put higher yields on the table. For now, we're still waiting and watching, but they were all pretty much up across the maturities. So with that, let's get into some price action here. The S&P 500, this weekly chart is still just an absolute thing of beauty here. This is textbook, just monster uptrend. It's just remarkable to look at this chart, especially cleaned up here on a weekly basis, and just see how steady and strong and powerful this uptrend has been since the bottom in October. Continues to just be relentlessly higher here. If we zoom out, of course, we've got no prior overhead supply. We're closing at all-time highs. We're back above, or not back above, we are freshly above for the first time this nice round 5,000 number, which everyone gets to do victory laps and be proud of. But basically just another kind of round number that speaks to some of the strength here and just big levels that we have crossed over. And so S&P 500, as we look at it here today, we came into the week with basically a strong last Friday. So we finished the week very strong last week at fresh all-time highs, and this week we chopped around to start the week with a couple of inside sessions, and these are the consolidations that we're getting here, right? This is kind of the extent of volatility and pullbacks and just entries into this market. If you're a shorter term technical trader, a couple of days of inside trading, and then that sparks the technical kind of squeeze and trend back up. So here we are, S&P 500 all-time highs, no overhead supply. If we throw Bollinger Bands on here, you can see we're comfortably kind of riding the upper daily Bollinger Band. Weekly, really same thing, expanding up here. There's clearly a lot of chasing an uptrend that is in place here, but we still don't have a whole lot of technical reason other than saying it's gone up a lot to want to fade this market right now. There is some complacency, of course, but it's not usually enough of a signal in itself to want to take a shot on the short side per se. So I think as risk managers, as traders, we are lightening positions, maybe harvesting profits, reducing size, but I think right now the trend remains firmly in the bull's case. There's really no disputing that. If we take a look at the Nasdaq 100, once again, throw on a weekly chart here. I'll take the Bollinger Bands off, but you can see fresh all-time closing highs here, up 1.87%. Remember, last week we had a little bit more of a sluggish kind of start, so to speak. So Friday we did close strongly, but not quite. I mean, we just barely got up, inching back up towards these prior all-time highs. We went inside day on Monday. Another very sideways choppy day on Tuesday. That was enough to to sort of spur the digestion, the breakout, the inch higher here. And then Friday was really the day where we, started to launch up again. So put on those Bollinger Bands. You can see daily expanding, weekly expanding, both inside. And again, it's kind of in that sweet spot where the worst thing we can say to find a reason to want to sell this market at this point is just that it's gone up too much. So we're not seeing a lot of underneath the hood concerns per se. We are going to look a little bit later at some individual stocks that look a little bit concerning in terms of the extent of their move, but we'll leave that for just a little bit. Russell 2000 is where I want to spend a little bit of time, because Russell 2000, in my opinion, is kind of at this point where I think it looks ready to turn here and looks ready to start to make a good run at these highs, and maybe, just maybe, finally leave this old range that it's been in for quite some time, since all the way to really the start of 2022. It has been stuck in a sideways choppy range from, call it 200 at the top end, all the way down to about 165 on the low end. That's been approximately a 20% low to high range over the past two or so years. And it looks like with kind of the higher low, just marginal sort of higher low that we got this week off of the January lows, and the fact that we did put two building with some volume here, we put two back-to-back strong days, kind of taking out some of this overhead supply, getting rid of and kind of shaking off some of the financial stress that we got from last week, or really the last handful of trading weeks, with New York Community Bank cutting the dividend, looking pretty stressed in its sort of capital allocation. That worry, that hangover here, looks like we're starting to try and shake some of that off. There's a lot of financials in this IWM small cap index here. Perhaps, right, going hand in hand, we'll jump to the US dollar here. US dollar looking like it just might feel like it's time to kind of roll a bit, digest at least a little bit, maybe stop its fierce uptrend that it's been in, right? These things kind of going hand in hand, perhaps at the right time to help the Russell 2000 start to break out, maybe start to take a little bit of a leadership role and help kind of pick up the next leg of this market. That's kind of my thinking here. Again, we do have a lot of small cap exposure, mostly through our automated trading system. So I do have a lot of small caps on. They've been working just a little bit better. They seem to be getting their footing a little bit better. So really looking at kind of a bottoms up approach of a lot of the individual stocks that we're currently holding, seeing them act a little bit better also gives me some additional clarity, insight perhaps into the Russell 2000 here. So let's see if that actually takes shape here. Regardless, I think you got a nice little higher load to work against. You still got a lot of overhead resistance that we still need to prove itself. So really this 205 area, I think next couple of weeks here, we'll see how the Russell 2000 fares against it. But it looks like it wants to go take a shot at the prior December highs. If it can start to rip through there, then we've got a big old range, lots of prior supply here that we could start to ratchet up, and then start to look at targets around 2021. So one step at a time, but it does seem to me that the Russell 2000 might be ready here over the next month or so. So we're going to keep a close eye on that. And I think that rounds out all of the market indices I wanted to talk about. Let's see what else. We already kind of mentioned the dollar, but the dollar, was up this week, but you could see that looking a little bit tired here. So again, that would give a little bit of help there to equities and perhaps those small cap stocks. Let's go to Bitcoin next. So unfortunately, we don't have a great way to look at chart Bitcoin here with a long history in TC 2000. So we've got basically the last 4 or so months, 5 months in Bitcoin. But you can see that this range that we've been in for really since December, right? Since the start of December, we've been trading between, let's call it 40,000 and 45,000. We've been posting about this chart on Twitter. I've been sharing some charts on this and talking about this in different places. But the Bitcoin ETFs were all announced right in here. So we got that nice excitement into the move here. We failed to break out. We rejected pretty magnificently, came all the way back to the low end of the range. And then we tried to break down below this range, tried to break the uptrend and tried to break below this range. That ended up failing, sucked us back into the middle of this range. And for the last about 6 or 7 days, this has gotten really tight right in here. And if you've been tracking some of the flows of some of the ETFs and the GBTC outflows and some of the action there, you can see that as those outflows, which we got crushed with here on the opening couple of weeks of the ETFs, we did get a lot of outflows from that GBTC, which converted their trust into an ETF. You get a lot of outflows of that of capital fleeing there, and that helped put that pressure on this down leg. And then when we finally saw some of that selling dry up, we popped back into this range. We consolidated here, kind of chewed through a lot of this overhead supply, and we got this nice 3-bar expansion in range here. So Bitcoin looks to be moving back up towards its cycle highs. We don't have future, this is not all-time highs, so Bitcoin formally made a high up in the upper 60,000, 68,000 or so. So it feels like it wants to try and march its way back up there over the coming months. We'll see if that's the case. Do have a long position, full disclosure, in Bitcoin, but that trade is working nicely. So of course you can track it with IBIT, for instance. This is BlackRock's ETF that they announced, or Fidelity, which I tend to use this one a lot as well, FBTC. And you can see this is now getting back up to its IPO highs, let's call it, but it's fund highs here. So we'll see if that continues to build momentum. Small caps and Bitcoin, those are two of the brighter spots, I think, that have a little bit of legs still left in them. What else do we got for us? China, we talked about. FXI, you can see still kind of batting around here, moving sideways. Good volume coming in, heavy volume again this week. So you're getting a lot of kind of large range bars. This is trying to find its bottom. Maybe it's done, but we haven't quite seen a trend reversal here. I do still think there's some potential there, but you know, certainly not without risk. KWeb, another way to look at it, or you can just look at Alibaba. Probably my favorite way to play it would just be Baba outright. But this is still, again, you can see trying to, you know, just figure itself out. Looks like it's taking shape, but who knows? We could see one more sneaky leg lower there for China before all is said and done. Let's next move into some individual stocks, and we'll call it a wrap here. So a couple of things I wanted to talk about where some of these big heavyweights. So this is, you know, this is probably the, you know, the worst thing for, again, when we said earlier, the thing that is, you know, the thing that gives us the most pause, or perhaps the biggest bear case right now, is just the fact that we have covered a lot of ground. And when we see some of these stocks like this, Nvidia, right, which is up to start off the year now, let's see, it's up 40%, 45%. Mind you, it's been 5 weeks of trading, and so we're quickly approaching a $2 trillion market cap now for Nvidia here, and you can see it's just absolutely left behind in the dust. It's weekly Bollinger Band here, totally above it. So this does not happen often. This is definitely a sign of just tremendous strength and chasing, squeezing, and perhaps what many would look at as a blow-off top here for some of these stocks. So you got Nvidia, which we're looking at right now. You look at something like Meta, which maybe, again, a different story. This had earnings last week. The big kind of expansion above its weekly Bollinger Band was last week. This week was more healthy digesting that, but you still have a big heavyweight above its upper weekly Bollinger Band. You have something like Snowflake, which again really ratcheted up today. Not a massive company, $70 billion, so nothing small, but still pretty big. Palantir, right? You're getting some of these up 43% this week, again, off the back of earnings, $50 billion company, but stretching above its weekly Bollinger Band. You've got Amazon, which, again, last week was earnings, stretching above its upper weekly Bollinger Band, closing in on $2 trillion. You got Palo Alto, over $100 billion, stretching above its upper weekly Bollinger Band. Eli Lilly this week, almost entirely outside of its upper Bollinger Band. Massive company, right? Top 20, top 15, 20 company here. You got ARM Holdings, which had its weekly Bollinger Band, doesn't really have too much data yet. Daily Bollinger Band, totally with above it after its earnings report. So title it, you know, really this week's video of exuberance in the air and all of this, like, this is where you're seeing a lot of froth, and this is heavily concentrated for the most part in bigger mega cap companies. And again, playing that devil's advocate on some rotation here where equity markets don't have to fall apart, but you might finally get that breather or just a little bit of normalization, digestion in some of the big companies, where you start to see some of the small caps start to pick up. I think everybody's been calling this trade for a while, and probably myself, in the past as well. So we'll see if it actually happens, but the froth, at least resetting into some sideways digestion, I think would be healthy, and less vertical ascents like NVIDIA, again, I think would be more healthy. So we'll see how this all shakes out here throughout the rest of this month. February is usually a tougher month, but really market has been just chugging along, no problem in sight. So we'll keep an eye on it. If you're in any of these stocks, I mean, congrats for catching some of these trends. I think your job as a trader there is to harvest profits, protect your hard-earned gains in them, and continue to ride where appropriate. But for me, I'm finding that opportunity more in, I guess, Bitcoin, smaller caps, and things like that. So I'm going to leave it there. That's what I got for this week's video. Let me know your thoughts. What are you looking at? What do you think about some of these big mega cap companies that are above their upper weekly Bollinger Bands? Let me know your thoughts on small caps. Do you think it's time to shine or just another disappointment? Would love to hear what you're thinking. And as always, I want to thank you for tuning in every Friday, long form market analysis just like this. You can check back next Friday. Hope you have a great weekend, and we'll see you in a future episode. Take care.